You have most likely wondered, what is the best ETF that I can put my money into? And in today's video, I'm gonna compare two of the absolute best ETFs out there, and that is the VOO and the SCHD. The VOO is basically the Vanguard index that mirrors the S&P 500 index, and the SCHD is the Charles Schwab US Dividend Equity ETF, which is basically one of the most popular dividend ETFs out there. We are going to look in depth at both of these ETFs, we're going to compare them, and then ultimately we're going to find out if you should invest $100,000 into either VOO or SCHD. And in case you're new to the channel, then my name is Casper, and here we strictly talk about investing and financial freedom. So if you really like investing and are on a mission to retire early, then press that subscribe button below. And without wasting any more time, then let's jump straight into it. Let's start out by talking about the performance, and many of you might think that SCHD has easily been outperformed by VOO, but that is actually not the case. When looking at the graph here, you can basically see that the performance of VOO and SCHD is much more similar than what you might think. VOO has returned 201%, while SCHD has returned 182%. And when you're looking at the graph for the last 3 years, well, then you basically see that VOO has been outperformed by SCHD by a small margin. And SCHD has had the best performance over the last 3 years, even though they've had a really bad 2023. And when you're looking at the performance here in 2023, well, then you can basically see that there is a big gap in performance. And VOO has returned 12%, while SCHD has given investors a negative return of 5%. And that is a really big gap. These are basically the past returns, and even though 2023 has been really bad for SCHD, well, then when you look at the long term, then is the difference between VOO and SCHD not that big. But now let's have a look at some of the stats for these two different ETFs. And when starting with the VOO, well, then we basically see that they have an expense ratio of 0.03%, and that basically means that for every $10,000 that you have invested, well, then you basically have to pay $3. So this is basically nothing. And they have more than $318 billion of assets under management. And that officially makes this ETF here the third largest one. And now let's have a look at SCHD. SCHD has an expense ratio of 0.06%. And even though it is slightly higher, well, then it is basically still nothing, as for every $10,000 you have invested, you have to pay $6. They have $46 billion of asset under management, and that makes them much smaller than VOO. However, for a dividend ETF, well, then that is actually pretty high, and it is the third biggest dividend ETF out there, and it feels like they're only getting bigger and bigger. But now let's talk about one of the most important things there is when you're analyzing an ETF, and that is the structure and the exposure that you have. Let's start by looking at VOO, and here it is pretty clear that the top holding is technology, and that accounts for 29% of their entire portfolio. And the second place is healthcare with only 13%. The exposure to technology in VOO is pretty big. However, that also makes sense when you're considering just how many big tech companies there is in the US. But let's have a look at the sector breakdown for SCHD. And this one looks completely different. The top sector here is industrial, and that accounts for 18%, and that is followed by healthcare of almost 17%. And the numbers here are a bit more evenly spread out amongst the different sectors. And that basically means that SCHD has a bit better diversification than VOO. Technology comes in at 6th place with only 12%. And as I mentioned before, then that was the biggest sector for VOO with nearly 30%. And when we dig a bit further down, well, then we can also see the top holdings for each of these ETFs. And when looking at VOO, well, then it is no surprise that we do see very big tech companies here, like Apple, Microsoft, Nvidia, Tesla, and so on. And that also explains why VOO has had such a good performance here in 2023. We have companies like Nvidia that are up by more than 200% year to date, and Tesla that are up by 126% year to date, and many other big tech companies that have experienced absolutely amazing returns here in 2023. And when looking at SCHD, well, then we see some very different companies compared to VOO. And it is companies like Amgen, PepsiCo, Coca-Cola, and so on, it is basically very big companies that are well known for paying out great dividends. So here we basically see that VOO is very tech heavy at the top, and that SCHD is very much focused on big companies that are paying great dividends. Overall, then is the diversification in SCHD slightly better, as they are not heavily reliant on a single sector, and that their numbers are a bit more evenly spread out. But now let's have a look at their dividends. And let's start by looking at SCHD, as this is an ETF that is purely focused on dividends. SCHD has a really high dividend yield of 3.77%, and that is really good. But what is even more amazing is that they have a 5-year growth rate that is really close to 14%. And when you already have a dividend yield that is sitting roughly at 4%, well then that is absolutely amazing. They have also been increasing their dividends for the last 11 years in a row. And that is really good when you're looking for a consistent and good dividend ETF. And when you're looking at these stats, well then it is very easy to see that this is a dividend focused ETF. And all of the stats here are really nice. And now let's compare that with VOO. VOO has a dividend yield of 1.61% and a 5-year growth rate of 6.10%. And we can immediately see that VOO is not as good when it comes to dividends as SCHD is. And they are also very inconsistent when it comes to increasing their dividends. And that is because the companies that are placed within the S&P 500 index is changing all the time depending on the market value of the individual companies. So when you're comparing the two, well then you basically have VOO, that is a really nice ETF and that has achieved a really great return. And then on the other hand you have SCHD, that is another really great ETF, and that has outperformed VOO when it comes to dividends. And that makes it a very hard choice, and it basically comes down to your personal preference. If you are the type of investor that likes the most passive possible approach, well then I would say that VOO is probably slightly better than SCHD. And if you are the investor that really likes receiving passive income, well then is SCHD the better option here. I personally own both of these ETFs here, as they are absolutely amazing in their own respective ways, and 50% of my entire portfolio is basically placed within the VOO. And I'm currently buying more and more SCHD, as I really like the passive income that I get from having it. And if I had $100,000 to invest today, well then I would basically invest $60,000 into VOO and $40,000 into SCHD. And that is because I do believe that these two ETFs should be the foundation of my portfolio. So which one you like the best is basically depending on what type of investor you are and what type of goals that you have with investing. That was basically all I had in today's video. Please let me know in the comment section below if you have any of these ETFs here as your favorite ETF. Thank you for watching the video. If you liked the video, then don't forget to smash the like button below and subscribe to my channel for more weekly content just like this.